Welcome back to the weekly portfolio update video. This has not been a great week for investors across the market. No matter how you have built your portfolio, no matter how diversified you are into different sectors and stocks, your portfolio is more than likely deep in the red. The Dow Jones fell 1.3% and around 450 points, while the S&P 500 lost 1.9% and the tech-heavy Nasdaq lost 2.7%. The Nasdaq fell further in correction territory, over 10% from its record highs last November, and has plunged over 7% this week alone. It's worse since October 2020. The portfolio currently sits at $9,768 or 13,597 Australian dollars, down $280 from last week, which is a little sad because I just broke the $10,000 mark, which in the grand scheme doesn't mean too much, but it was nice to look at for the time being. Overall, going through my portfolio over the last week, Apple is down 6%, Alibaba is down 7%, Costco is down 2%, Facebook is down 8%, Google is down 7%, JP Morgan is down 9%, Microsoft is down 4%, QQQ is down 7%, and the S&P is down 5%. Not a single stock saw green this week for me, and it makes it worse. It's right after I started increasing how much I'm depositing into this portfolio. But as bad as it might seem, I haven't lost much money. There are investors across the world who are probably in much worse positions than myself, so this correction shouldn't discourage my investment journey. I'm actually planning on continuing to invest more, as I believe the companies and ETFs I plan on directing my capital towards will be going nowhere anytime soon. This is how I plan to react to this market correction. When I started investing in February 2021, it was right after stocks surged and bounced back from the pandemic crash, meaning I missed out on amazing opportunities to buy and invest in some great companies at such a discounted price. And I know you shouldn't just buy a stock because it's down, because it can be like catching a falling knife. You should research and understand why the stock is falling, and do your own analysis on what price you think is acceptable to buy the stock. But with these great companies like Microsoft and Apple, I don't see them going anywhere. So if they want to fall further, I'll simply just use this as a time to buy more shares in companies I really like. Now into more general news. Netflix stock, which went into Friday's Nasdaq session, already down 16% in 2022 to date, plunged 22% today alone on waves of selling. Intraday low of $380 in the opening hour of the day, it finished at $397, its worst closing price since April 2020. Trading volume was almost 20 times normal levels. The rout followed a fourth quarter's earning report that disappointed many Wall Street analysts and investors and triggered a large debate on the outlook of streaming in general. While the company missed its fourth quarter target for subscribers by just 200,000, 8.3 million additions versus the expected 8.5 million, its weak guidance for the current quarter set off alarms. During the quarterly earnings interview, top executives could not identify for one cause of the slowdown in subscriber growth, instead reiterating confidence in their overall trajectory. For now, we are just staying calm, co-CEO Red Hastings said. Analysts by and large did not stay calm. Downgrades and downbeats, reports from them rained down, and many who opted not to lower their rating on Netflix did trim their price targets, acknowledging the lackluster vibes. The most notorious bear in the stock, Michael Patcher of Wedbush Securities, issued a note, clients alluding to his long-term and frequently misplaced pessimism about Netflix. In the note titled, "Even a broke clock is right every 10 years, he described the Tuesday's earning report and management commentary as a reckoning. We believe Netflix investors are just beginning to appreciate Netflix's future status as a low-growth, extremely profitable enterprise." He wrote, "When they fully appreciate this, we expect Netflix's share price to decline further." Some Netflix investors still believe in this company and believe there is space for growth. I believe the stock was overvalued, and this correction has made it a more reasonably priced. And I believe Netflix is a good company. I myself have a Netflix subscription, but it's just somewhere I personally would not invest my money. More massive business news. Microsoft will acquire Activision Blizzard for $95 per share in an all-cash transaction valued at $68.7 billion, inclusive of Activision Blizzard's net cash. When the transaction closes, Microsoft will become the world's third largest gaming company by revenue, behind Tencent and Sony. The planned acquisition includes iconic franchises from the Activision Blizzard and King Studios, like Warcraft, Diablo, Overwatch, Call of Duty, and Candy Crush, in addition to the global esports activity through the Major League Gaming. The company has studios all across the world with nearly 10,000 employees. Bobby Kotick will continue to serve as CEO of Activision Blizzard, and he and his team will maintain their focus on driving efforts to further strengthen the company's culture and accelerate business growth. Once the deal closes, Activision Blizzard business will report to Phil Spencer, CEO of Microsoft Gaming. Gaming is the most dynamic and exciting category in entertainment across all platforms today, and will play a key role in development of metaverse platforms, says Nadal, Chairman and CEO of Microsoft. We're investing deeply in the world-class content, community in the cloud, to usher a new era of gaming that puts players and creators first, and makes gaming safe, inclusive, and accessible to all. Players everywhere love Activision Blizzard games, and we believe the creative team has their best work in front of them, says Phil Spencer, CEO of Microsoft Gaming. Together we will build a future where people play the game they want, virtually anywhere they want. For more than 30 years, our incredibly talented team have created some of the most successful games, says Bobby Kotick, CEO of Activision Blizzard. The combination of Activision Blizzard's world-class talent and extraordinary franchises with Microsoft's technology, distribution, access to talent, ambitious vision, and shared commitment to gaming and inclusion will help ensure our continued success in an increasingly competitive industry. Mobile is the largest segment in gaming, with nearly 95% of all players globally enjoying games on mobile. Through great teams and great technology, Microsoft and Activision Blizzard will empower players to enjoy the most immersive franchises such as Halo and Warcraft virtually anywhere they want, and with games such as Candy Crush, Activision Blizzard's mobile business represents a significant presence and opportunity for Microsoft in this fast-growing segment. The acquisition also bolsters Microsoft's Game Pass portfolio, with plans to launch Activision Blizzard games into Game Pass, which has reached a new milestone of over 25 million subscribers. With Activision Blizzard's nearly 400 million monthly active players in 190 countries and $3 billion franchise, this acquisition will make Game Pass one of the most compelling and diverse lineups of gaming content in the industry. Upon close, Microsoft will have 30 internal game development studios, along with additional publishing and esports production capabilities. The transaction is subject to customary closing conditions and completion of regulatory review and Activision Blizzard's shareholders' approval. The deal is expected to close in the fiscal year of 2023. The transaction has been approved by the boards of directors of both Microsoft and Activision Blizzard. I believe this is a great acquisition for Microsoft and should be allowed to go through. This is one of the reasons I invest into Microsoft and believe in the company so much. They are always looking to grow and expand and add more sources of subscription revenue, which I believe will help Microsoft continue to grow for many years to come. Overall, it was a bad week for investors' portfolios, but I believe it was a healthy correction and something investors should be prepared for, and hopefully help teach, especially new people in the market as myself and others, that stocks don't just go up. And I'm still long on the stock market, and this small bump won't change my position on stocks and my investing journey. Hopefully this video has helped explain the massive drop across the stock market and how I'm approaching it. Feel free to share your thoughts and what you are doing to your portfolio. That is all for my weekly portfolio update. Feel free to like and subscribe to Business Ventures for more weekly portfolio updates and business and financial content.